Hello, hello, hello. Happy Thursday morning, everyone. How is everyone doing today? Good morning, Donald. Good morning, Patrick. Good morning, Richard. That's why I follow price action, Richard, because if you don't know what to make of them, price action doesn't lie. It's what's happening. Good morning, George. Good morning, Martinez. Good morning to all the people in the background who aren't jumping in on the chat. All right. Good morning, options 22. So we had the PPI numbers coming out month over month, way better than expected. Minus 0.5%. If core PCE in 2 weeks from tomorrow comes out much better than expected, I could see them going to a pause at this point with PPI. Even with CPI still a little hot, I could see that, but we'll have to wait. We had jobless claims elevated. Initial jobless claims coming in a little higher than expected and higher than previous. Continuing jobless claims, where do we sit? We coming in forecast 1815, coming in 1810. A little better than previous, but still they are climbing up. If you look at the trend, you can see the trend. This is flattening out around this 1800 level a bit. But that's where we sit. What's going on the rest of today? Nothing. Absolutely zip zilch. Nada. So unless there's headlines that roll across that really move the market, that's about it. And then tomorrow we got big earnings kicking off and retail sales and some other numbers. So tomorrow's going to be important. Mixed to up, mostly up this morning. So that's where we sit right now. If you look at the sectors, let me just do a quick refresh here. We have comm services, consumer cyclical, and basic materials and technology leading it higher, but everything is green. And it's more one of those risk on days so far based off consumer cyclical, comm services, and technology in the top sectors. We have 62% now for the rate hike. So coming back down a bit, but still technically favoring. We do a refresh on this. Well, we're waiting for that. Fear and greed still in greed mode. So 63% for the rate hike. So the market just barely pricing in a rate hike for May in 20 days from now. In terms of gamma, we're trading 41.34 right now in the S&P. 41.23 is gamma flip, so we're technically in positive gamma. So any rally, dealers are selling into the rally. You still have the minor put level at 4,100, so that is some pretty key support on any sell-offs. But nothing really to talk about there in terms of Delta, which was a miss and was up pre-market. And that's the one I looked at. I did not see Progressive or Infosys after close. Nothing today. And then tomorrow, again, that's where things really kick off. Hey, Paul. Good morning, John. PPI, well, a lot of PPI was due to gas prices, and that's going to go back up. But even if you start stripping out that, we're more closer to the PPI is waning as a major component of inflation for a pass-along standpoint from manufacturing. So we'll have to see how that holds up coming forward. Now, I have the pound on there still. Terms of the S&P, we got the rally. We just broke through recently. You see overnight that area I identified yesterday. Formed a little double top, pulling back right here. Now finally broke through. So this is now going into the open. Support coming in about 41.31. With that, you see even spike higher during that PPI and then really settling up above there. You have a clear path move on a rally, 41.42, and then a major topping area about 41.50 to 41.55 is what I'm watching. If we break back below 41.30, there's my support level will be going is about 41.24 to 41.25. So that's really what I'm watching from the higher time frame. If you look at the 4 hour, you see Again, this 41.50 area just above the 37.5 harmonic, that's really a key major resistance on a rally today. You see we had a couple spikes above it, but keeps settling below it, so that's be a key target I would be utilizing. All right, so that's where that sits right now with the NASDAQ above also the key little level. At this point, I'm raising it up. So support is 13K. Resistance, let's jump out to the 4 hours. Your resistance area, we're going to go with right around 13,065, and then I go to 13,100 would be my next key level. Those would be the two key levels on the upside. If you get above there, there's not much until you get to about 3180. If we start breaking back below 13K, I'm going to 12,950 area. And the major line in the sand is 12,920. And keep in mind also, this is at the very bottom of the daily rotation zone. Cycles are still at the bottom on the NASDAQ and at the top and rolling over. So we still could see some upwards price action, but unless I get very strong internals, I more so go into the choppy side of stuff. On the Dow, I'm just going to be watching these little short-term harmonics to see if we come back up, especially 33,980 and then 34,026 to put us in potential little, I don't even know if that would be valid double top area, but I'd really be watching for a pullback for 33,515 if we break below yesterday's, or really the opening low after the. Let me know if we are back. Let me know if we are back. We had a little technical glitch there. Technical glitch. Good morning, Sterling. Good morning, PMG. Yes, I still do see it. I can only go off my long-term stuff. I still have long-term sells because also remember it's going to start trading off our earnings. We're going to get to the spiders in a second. All right, I don't know what happened there, but we are back. Russell, the breakout area is at 1800. Above there's 1815 or 1815, 1816 for a target area. Support coming in at 1775. VIX is looking like it's trying to break down against a major support area. But unless this really gets acceleration below 18, that's where we sit. What else do we have? The DAX. Again, a lot of stuff's going to be waiting on tomorrow. The DAX on any rally. There just aren't still a lot of good setups. Major resistance at 15,900. Above 15,900, 15,975 above there. This has been a slow market for setups. Watching this key resistance at 116.08, 116.07, 116.08 in the futures. Other than that, the 10-2s still in consolidation. The dollar index, by the way, the double top is off the table. Really watching to see how it reacts right now to the lows put in at the beginning of February. The major double bottom is still in play though. And this is exactly the way if we break down, this is where my next key target would be 99.85. Crude still holding up against the 200 area. If we can pop through the 200 area, the next target is 85. On any pullback, you're looking at key support coming in right about 81, 80 to 82. So it's still just in a trailing mode with divergences potentially setting up. Natty gas back down to the bottom. Rotation zone still holding. No other pattern there. Gold breaking to the upside. Really watching to see how we react. Yes, the double top is still in play. 2065 is the next key target upwards, which would take the double top, potential double top off the table. Silver hitting our next harmonic. I'm also going to be watching for a pause coming up in silver. Copper trying to get to this breakout level. So I'm going to be keeping a close eye on that. The double, which has not been triggered yet in the yen, we got the yen rolling back over. So my major support area starts at about 131.80. Euro, the double top is off the table. You can see eking out. We still have this non-triggered double bottom in place. Another great area to use the reverse harmonics. So the next target would be 110.97. So 111, then 111.60 are the next targets there. The pound still has the double in play. But the next target on a rally is 126. Bitcoin, basing sideways, basing if it pops up 31,280. We'll get to the spiders and the Qs in 1 second. Tesla still in consolidation. On any rally, we have yesterday's open that I would be utilizing of 190.74. We're trading 172. Between that area with yesterday's big sell-off bar, a 185.95 to 187.36 would be intermediate targets. On a rollover play would be 180.50 and your major support 178. The spiders and the Qs. Spiders still 409.26 where we're trading. On a rollover play 408.05 to the upside. 409.50, then 410.36, and then 411.14 are the key targets. The Qs, rollover play 313 is the major support area considering a gap fill, and then you have yesterday's little poke lower in the harmonics. The rotation zone support's coming at 311.50. Resistance, I would be utilizing first level of 315.95, then 317.10. The minor area, let me go to a 4-hour. Let's see, about 315 is the first little area of resistance. Is that an inverted? No, it's not. Because it has to be reversing a move. It would just be a breakout above these prior highs, this 4,200 area, but the target then would be 43.15 on a breakout above the highs from the beginning of February. Remember, an inverse head and shoulders has to be reversing a move. This is the move leading into it. So you don't have a reversal pattern. Where else do we sit? That is really about it. Remember, by the way, if we do get the rally out, I'm keeping an eye on Apple. A little gap up today, but the trigger for this mini double bottom pattern we talked about yesterday afternoon is 162.36 on a closing basis. So I am keeping an eye on that too. With that, that is about it. Sorry for the technical glitch today. Hopefully everybody got the gist of the live stream. I will be back with Bob this afternoon, and we'll be prepping for a busy trading day tomorrow. With that, I shall talk to everyone later. Bye for now.